It doesn't take much to get gold to 6,000. I mean, we're almost there. But I mean, if you're talking about more, much higher prices, 10,000, 20,000, I mean, those prices are coming. But I think that's going to happen in the context of a major U.S. dollar, devaluation. We haven't really seen that yet. The dollar has drifted lower over the past year, but not that much lower. I mean, it's hit a record low about against the Swiss franc, but it's still well above record lows against pretty much every other currency. And so I think to see, $10,000 or certainly $20,000 gold, I think the dollar is going to be a lot lower against its foreign currency counterparts.
Precious metals are back in focus as investors look for ways to preserve value during uncertain periods. Gold prices have climbed to a series of record highs, and silver has seen strong gains followed by sharp swings. These developments stem from a range of factors, from economic uncertainty and continued central bank buying all the way to seasonal effects linked to regional and religious festivals. Bank forecasts remain bullish despite the short-term volatility. J.P. Morgan predicts prices will reach $6,300 per ounce by the end of 2026, while Deutsche Bank is standing by a $6,000 year-end target per their recent notes. In this video, renowed economist Peter Schiff discusses gold as the ultimate hedge against the impending dollar crisis and the failure of central bank policies. If governments need to repair heavily indebted balance sheets, policymakers could dramatically increase the official value of gold. In that scenario, Schiff believes prices could potentially reach $20,000 per ounce, or even far higher. Regarding the tightening conditions in the silver market, Schiff says that growing physical demand is beginning to expose the fragility of the paper-based trading system. If more investors insist on physical delivery and inventories continue to shrink, silver could experience an explosive repricing, potentially pushing prices toward $200 per ounce. In his analysis, Schiff mocks the Fed's target of 2% inflation, stating that the government has already lost the war on inflation. Schiff warns that as the world stops holding dollars, those trillions of excess dollars will return to the U.S., causing prices for goods and services to skyrocket domestically. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Peter Schiff's recent interview.
I think, when you're looking at gold above 5,000, obviously there's a major loss of confidence in the U.S., in the dollar, in the Fed, in the ability of the U.S. government to get its fiscal house in order. I think central banks are moving away from the dollar. And when they move out of the dollar, they have to move into something else. And what they're moving into and what they've been moving into is gold. And that's not just an indictment of the dollar, but the entire fiat monetary system, because they could be buying euros, they could be buying yen, could be buying pounds, but they're not. They're buying gold. And so gold is the heir to the dollar's throne, not some other fiat currency. And I think that this is going to be a very big problem for America because we have relied on the dollar status as a crutch, really. And it's enabled our economy to move forward despite the fact that we don't produce enough and we don't save enough, because we're able to rely on the production and the savings of the rest of the world because they need our dollars. But once they don't need our dollars anymore, then that's going to expose a huge problem. And Americans are going to see a substantial degradation in their standard of living because prices are going to go way up on goods that we can no longer afford to import. And this whole service sector, consumer borrow and spend economy is going to implode. And that would include the government, because the government is bloated and the government is spending borrowed money. And so the government's going to have to tighten its belt, just like everyday Americans. It doesn't take much to get gold to 6,000. I mean, we're almost there. But I mean, if you're talking about more, much higher prices, 10,000, 20,000, I mean, those prices are coming. But I think that's going to happen in the context of a major U.S. dollar, devaluation. We haven't really seen that yet. The dollar has drifted lower over the past year, but not that much lower. I mean, it's hit a record low about against the Swiss franc, but it's still well above record lows against pretty much every other currency. And so I think to see, $10,000 or certainly $20,000 gold, I think the dollar is going to be a lot lower against its foreign currency counterparts. It all boils down to inflation, but a lot of it too, again, is a loss of confidence in the U.S. dollar, in the fiscal responsibility of the United States Congress, of the presidents, of the political parties. A loss of independence of the Fed, and a lack of confidence in the ongoing Fed independence. Now, all that ultimately boils down to more inflation. So regardless of what it is in particular that is causing the concern among our creditors, and they don't want to hold our dollars and they don't want to hold our bonds, at the end of the day, all roads lead to inflation. I mean, that's the problem. They don't want to hold dollars that are going to lose value. They don't want to hold bonds that are denominated in a currency that's going to lose value. For whatever reason they believe that that's going to happen, that's what's going to happen. Of course, they're right. The dollar is going to lose a lot of value. It's lost a lot of value in the years past, but I think it's going to lose even more in the years ahead. I mean, silver already got to 121 just like a month ago.
Yeah.
Now it's pulled back considerably. It's in the mid 80s now. But I don't think anything really has to change for silver to get back up to those prices and then higher. If we just stay on the current trajectory, we're going to get there. But as I think we really get a full-blown dollar crisis, which, we're not at that point yet, but I think we're headed in that direction. But when we get a dollar crisis and a sovereign debt crisis, that's the environment where I think you see an explosion in precious metal prices. And that's where you could get silver, up in, upwards of $200 an ounce. I mean, there probably already is one, but it's just going to get worse. And there's going to be a shortage of a lot of things when there's a surplus of money. When the central banks just flood the world with money, people have lots of cash to bid up prices, But with what's going on now, let's say with AI and the big build out there's a lot of demand for silver. So silver's used in a lot more things today than it was used in a few years ago. Yet we don't have, a lot more silver to go around. All we have is, a high price that could try to, free up some silver by getting people to sell some of the silver that they may own so it could be used someplace else. So maybe you don't need silver, fancy silverware set, or you don't need the candelabrums, or whatever you might have in your closet somewhere. Some of that silver can come on the market. Yeah. But and then of course, we could step up the mining of silver, but that's not something you just wave a wand. It's going to take some time.
In the interview, Peter Schiff predicts that the U.S. dollar will lose its status as the world's reserve currency as foreign nations lose confidence in its purchasing power. Schiff describes the current economic state as a massive bubble fueled by cheap credit and government spending that is destined to burst. He advises investors to move away from dollar-denominated assets and instead look toward real money. Concurrently, Peter Schiff emphasizes that speculative markets like Bitcoin could face significant volatility or even a sharp crash if global liquidity tightens and financial stress increases. As of March 2026, Bitcoin is facing a potential significant downward correction, with some analysts warning of a possible drop to $40,000 or lower following a volatile period. Fears of a deeper crash stem from weakening technical structures, high leverage, and macroeconomic pressures like inflation and interest rate concerns. At the same time, Schiff expresses that gold tends to benefit in such environments because investors historically rotate into hard assets during periods of uncertainty. Let's jump into the interview.
It's not becoming one of the largest expenses. It already is the second largest expense. The only thing that we spend more money on is Social Security. And interest on the debt is going to overtake Social Security soon, over the next few years. And not because Social Security spending slows down. No, it's going to continue to grow too. It's just that the interest on the debt is going to grow even faster because interest rates rise, and then you have to refinance all the maturing debt. Plus, the budget deficits are running close to $3 trillion a year now that we just add to the pile every year. And I think that that's going to pick up. I think we're going to see a $4 or $5 trillion deficit in a single year. We'll see what happens with the war now with Iran, how long we're going to fight that, how much that's going to cost. But the one thing we know is they're not going to pay for the war by raising taxes. So they're just going to borrow more money and they're going to create more inflation to pay for it. I mean, it's definitely going to look bad. The question is, how quickly does the dollar collapse? Is it just a swift, major crash, or is it something that takes place over several years where the dollar just gradually and steadily erodes away in value? I would tend to think it'll be more like a crash. It'll maybe be a steady decline until it, loses that and just starts to snowball, and you start to see the dollar really implode. So I think that's what we're headed for. I think what's going to cause Bitcoin to collapse is going to be a lot of people who own it wanting to get rid of it and just not having enough new people who want to buy it. So, the dynamic is basically unique to Bitcoin and crypto. And so I don't know what ultimately is going to trigger the exodus, but I think that Bitcoin has already reached the point where it doesn't go up anymore. That it's kind of exhausted that because there's not enough new money coming in to allow the existing money to get out while maintaining the upward prices. So, right now, I mean, there's about as much coming out as there is going in because the price has been pretty stable. But I think that it's far more likely that the sellers will start to overwhelm the buyers than that the buyers are going to overwhelm the sellers. So, I don't know what the ultimate catalyst is. I think the fact that gold did so well in the last year or two and Bitcoin went down, I think that really blew up the whole digital gold narrative. So I think maybe when gold really starts to break out again, maybe gold gets above 5,500, that could put a lot of selling pressure on Bitcoin. When Bitcoin doesn't break out, in fact, Bitcoin rolls over and starts breaking down. And, there's been a lot of leverage that's been built up over the last couple of years that we really didn't have in prior Bitcoin downturns. And, there's so much of the Bitcoin that's held in ETFs and other companies like Strategy. I think we're in uncharted territory about the extent that we could see this market completely implode. So it's kind of like, why even contemplate something that is not going to happen? I mean, central banks are not going to buy Bitcoin. I mean, if they were going to buy Bitcoin, they'd have bought it already. I mean, it's not like they don't know about it. They're buying gold. Sovereign wealth funds, some have bought because they bought Strategy, or maybe they bought some of the ETFs.
Yeah.
But that wasn't a monetary decision. That was a decision made by a portfolio manager. And I think a lot of investors kind of got suckered in to Bitcoin as an investment asset. But it's never been looked at as a monetary asset. The central banks aren't looking at, hey, we should have Bitcoin as a reserve. It's just these funds have decided to include it in an investment portfolio alongside of stocks and stuff like that they might own. And the central banks, they don't buy stocks. So I don't think it's going to happen. But what I do think is going to happen is I think that some of these sovereign wealth funds that put their toe in the water are going to sell. They're going to, realize that this is no place for them. The temperature didn't feel good. They're going to take their toe out of the water. They're not going to, put the rest of their body in. They're just going to, gracefully exit the trade. So I just see Bitcoin going down slowly until it goes down rapidly. But that's the air is coming out of this bubble. It's coming out slowly now, but at some point it's going to come out a lot faster.
Safe haven spillover from gold provides an established capital rotation pathway, as investors seeking diversification within precious metals have historically directed incremental allocations towards silver when gold's rally becomes extended or crowded. If these structural imbalances continue to intensify, gold and silver could regain a much larger role in preserving purchasing power and stabilizing financial systems. If inflation continues to erode the value of fiat currencies and global confidence in the dollar weakens, could gold ultimately be revalued to dramatically higher levels as a way to restore stability to the financial system? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.